Hello and welcome again. This is Millionaire Autobahn. My name is Martin. Thank you for joining. So as I said in the last video, I'm starting this video series Back to School. And today's episode is about what are stocks or shares. And because we all have heard stocks and shares many times, but often it's not really clear what's the difference. And today I want to talk about what the difference is, why there are shares out there, what a stock is, and how this actually started. With that said, let's just start in a small town somewhere in America where there's a little bakery. And that bakery's cakes are off the chain, right? So there are many people standing in line every day to get these cakes. And so the owner of the bakery thinks, well, I think we should expand. We should go into other towns around the area, maybe even to a bigger city. But in order to do that, they need money. So they could go to a bank, right, and ask for a loan. They might even get the loan, but that loan is limited. That loan has a lot of interest rates, so it will be very expensive for the long run. So what's the owner doing? He's trying to get investors. So he's going out with a business plan and asks friends and family members and other people to invest into his business, into his bakery. So finally, at some point, he will find somebody who says, okay, I invest 10%, but that 10% I will give you $1 million. And with that said, the owner of the business can go out and create or build more shops and expand the business as he wants to. So the question is, why would somebody invest into a company? Well, the investor hopes, of course, that the company is doing well and that because of that, the $1 million will be maybe worth $5 million in 5 years. Because then he can actually sell the $5 million worth of shares that he has to other people. And so he made quite a good return on investment. So this actually already brings us to the point, stocks and shares. So what's the difference? The difference is that the stock is the whole company in itself. And a share is a piece of the company. You could say the stock is the cake and a piece of the cake is a share. That's how we see it. So we as day traders, we actually are not trading stocks, we're actually trading shares. Because the stock is the whole company, 100% of it. So then going back to why actually then do companies go on the stock market? What good does it do? They could just go out and get individual investors. I, from my personal experience, know that going out getting investors for your business is a very tough task. You have to drive around, fly around the whole country and find people that are interested in what you're doing, that believe in you, that went through your business plan and said, okay, we invest this much money for this much percentage of your business. A way easier way is going on the stock market. So let's say the bakery, they already now have like 10-15 stores around the area and they want to expand all over the state or even the whole country. But for that they need way more money. So what they would do is they would go on the stock market and sell their shares to individual investors. And that's possible because there's millions and millions of people out there that invest small amounts of money into all sorts of businesses. And when you trade a stock, you actually don't look at the business plan. You just look at the overall numbers. There's like 5-10 points that are interesting to you. What's the company doing? What's the future outlook? What's the current revenue? And so on. And with that said, that's how people invest. These companies then give out those shares to the investors on the stock market. And the question is, so why would it be interesting for a company if a stock price goes up? Well, the thing is, when a stock price goes up, the company is worth more. So the company itself can use their own shares and use it to get maybe more credit from a bank, to build more stores. Or they can use that to give out to employees or to their CEO. We often hear, oh, the CEO got $10 million worth of shares from a company. And so that's why they want that the stock price always goes higher and higher. So they have to perform good, that the stock price goes higher and higher. And for us as day traders, when we buy these shares, important shares, we want that the share goes up in a matter of minutes or hours, so that we can make our little piece of profit during that time. So we buy a piece of the cake and later on sell the same piece of the cake but get more money for it. That's overall actually how the stock market works. It's at the end a very simple process, a very clear process, if you will. And I think it's important to understand that process, because only then you have a little bit of a better feeling what you're actually doing, right? That's actually already everything for this video today. Just so you have a little bit of an idea what a stock is, the whole company, and the share, individual pieces of the company, and that it's important for the company that the stock price goes up. And that's what we want as investors or as day traders, to make money on the stock when it goes up. I want to point out the next video, which I think is actually one of the most important ones. It's about the mindset, about procrastination and analysis paralysis. When to start, how to start, finally start. Because a lot of people have this idea to become a day trader, but they never start, because there's so many hurdles. So that's the next video. So I will talk to you again next week. Stay tuned and thank you. Bye.